So welcome back everybody into another setup review. As you can see, as always, I'm going to do a review of the setup that I have saved from doing the live trade. When I see a setup that I miss, a setup that I was not able to take for whatever reason, I try to save it as a screenshot in order for them to review at the end of the week, at the end of the month, and being able to understand what are the main characteristics of a winning trade. So for example, here we have number 101. This was actually a real trade that I took, and we already talked about it a lot in the previous videos, but still it's important to get all the data in here. So this was around 235 was I remember we had here a USD report which gave some strength to the USD. We had a break and retest below, because I remember that over here we had a PSA, and this is the retest of a PSA. So this is a retest of previous PSAs. The entry candle was opposite, bearish, so it was an in trend. So entry at retracement and anticipation of rejection. So this one was a win either way, even with the 15 pips break-even rule. It will go more than 50 without the break-even rule. Will still go to a win, and then we'll go to a win. So this one was pretty easy because, of course, we already talked about it a lot. So let me just... Okay, and let's move to the next one. So for example, this one is 102. So here I remember the day was a very slow day. As you can see here from the trend, yes, it was a clear bearish trend, but it was quite slow. You can see the size of the candles and how slowly it was moving. That I remember I was not able to enter in this downtrend. I entered on later and for a loss, I remember. But we can identify here that so we are in a clear bearish trend. We are breaking below, and now we are retesting these previous lows for this previous PSA for possible continuation bearish. So we have some PSAs, which is the key level, and we have another 4-hour PSA, and this one is the last PPL, where we had some rejection, some sort of reaction and price points. So for example, here no, but you can see here that we had some price movement. So that's why I marked this area, and that's where we could have had the possible entry in anticipation of the continuation bearish. As you can see, the price action is not that clean, so we could have possibly had a few entries, and without any break-even rule, so either stop loss or TP, this would have been a win. And I would say that of course, as happens in live trade, this would have been my possible entry. So the candle closing over here, or maybe this one. So we are now, if I want, yeah, this is already after New York Stock Exchange. So this one is a sell, this one is 1535, this is end of pullback, retest of previous PSA, that's it. And the candle would be either over here, yeah, but mainly opposite, bearish, yes, entry at retracement to previous PSA and PPL, not a single information, but multiple. So this one would be no, actually no, probably if we entered over here, that's 96, we would 94.5, it would probably be a break even. I don't know then if the following one, yeah, the following is another one. This one had before. Okay, as you can see here, that was the low of the price action. So it's barely at 30 pips. So this one would be probably break even instead of win, depending on the entry. 30 minus 15, because it never went to 45 pips, which is a 1 to 3. But yeah, let's go back. Let's just have, I mean, these are multiple setups, so I'm not really I will choose, I mean, they're the same. So for example, over here, okay, let's do it like this. So here we were still having a bullish trend, and we only had the possible bearish bias shift after price broke below these previous PSAs on the left hand side with the possible first entry. Then we had the break and a retest of these previous lows. This entry bearish would have been very difficult because the bounce was coming from this very important PSA. So that's why when we had a break and retest of these previous lows, so with this entry, that would have been a better entry, safest. And of course, the safest in absolute was below these double bottom lows, and you had a break and retest absolutely clean. So what I would like to, I mean, it will be the same. So let's say the same. This is more break and retest, multiple times, retest of previous PSAs and key levels. Entry always better at opposite. So you can see bearish, lower time frame is very bearish. High time frame so far is still bullish, but below here it's okay, so far here it was not, because high time frame was still bullish and lower time frame was absolutely bearish. So we had a very multiple entries below previous PSAs and key levels with thin waves and retests. Not much volume and momentum, but continuous selling off. So most of them, I mean, the entry, for example, over here, it would probably be, I don't know if it would be a break even. No, it will only be 1.75, only be 7 pips before going down. This one would be probably almost a break even, but not. Yeah, but I would say that it's more risky than not. Would you go, yeah, 50 plus, because the price will simply go below. So this one will be 30, and this one will be a 45, because it went to 45 pips at least. From here, 1, yeah, it went to 40 pips in a few minutes. And yeah, the next one, after going down to 1991, and here we are 1999, so it's more than 80 pips. This is a setup that is a possible very counter trend double bottom, with the confirmation that this reaction over here is coming at a strong for our PSA. So what we can actually see, of course, we had like a 100 pip move down to the downside, breaking multiple PSAs, as I just showed you. So what we can identify is a possible shift in market structure when. So as you can see, I was talking about selling over here, because I mean, that's a reaction point, and if you're looking for sells, that's good, and it will still be a profitable scalp. But that's why I'm not identifying this single one as a possible higher low, but the next one, so for example this one, is a possible double bottom. So now we are identifying a possible double bottom. This will still be a very high risk, high reward entry. Double bottom at a PPL making a higher low. As you can see, also the candles are closing above this, basically above this previous reaction point, and almost tapping again the 4-hour PSA before going back bullish. I don't know if this is a value setup, because of course 1997 can still be a possible bearish continuation. What I would like to see also, it's a retest and then a continuation bullish, retest of these previous highs and then continuation bullish. Entering here will be quite dangerous due to the fact that we are very close to the 1997 and the price could easily make a new pullback with like 50% of this rejection to the continue bullish. I don't know if we have the confirmation, the further confirmation after this price action, but let's see. So for now, I will say buys. This is later. Yeah, it's 39. I will say 15, 14. This will be end of pullback. Double bottom at previous highs and PPL. Entry will be at opposite candle. Of course, it will be entering at this candle close, 1 or 2. Lower time frame, it's bearish. This is bearish, so it's a counter trend trade. Possible counter trend trade after reaction strong for our PSA with price making double at new higher low. So this would be for example, if this was the entry, this would be a win. It will go, I think, more than 50, and this one would be 30 and 45 if I'm not mistaken. So, okay, yes, you can see price simply went up back to 1998. So yeah, it's a 45 pips to here. So it's, yes, it's a very good, but as you can see, the best entry would have been with the confirmation. So when I was showing you the retest over here, because I was afraid of this price action, having an entry above here, above the key level, was the best. So that's why we are seeing here this possible entry. So let me just grab a screenshot, because it's the best, because now you have the confirmation that lower time frame, the bias is bullish now. So okay, let's write it down. This is a buy, this is later, this is a little bit before the new 4 hour, so it's 57, end of pullback, retest of the key level after breaking out, entry at opposite candle close, bullish. Overall is still bearish, I would say. Entry at candle confirmation of retest of level 97, safest entry. Win either way. 97 2000. I don't know if it will go further up or it will have a rejection over here, because as you can see, we have this level. I don't know what percentage of retracement of the overall bearish move we are, but yeah, I will be cautious about it. So for sure it will be 30 pips, but I don't know about here the 45. So this is another day, because we are back at 1980. So yeah, that's another day. So we don't know if price will actually go 19th of April. Yeah, I could open it. Just give me a second. Okay, so as you can see here, the price would actually go from 1997. It will go more than 130 pips without coming back to your entry. So that's when it will be 50 plus. We don't need to put much more, and this will be a win of 45 pips. So yes, then now we move on and we see the next one, 108. We don't have 106, 107, and that's fine. We delete. Okay, so this is a buy, clearly, and the price is clearly trending. Now we are around 235. This is an end of pullback. Retest. It's not a PPL. That's a very risky entry, I would say. previous highs, opposite, bullish, bullish. So the only thing is that we are going very strong. I don't know if we had any news or whatever, but as you can see, we are going in a very strong bullish trend. Break and retest, break and retest. So this entry is quite risky because it's not at any PPL, but it's probably a 50% of this overall bullish movement, or probably, yeah, or 60, or probably 61. Yeah, I would say that's probably a 61, because it went from 1975 up to 1979, so it's a 40 pips, and then the correction is from 1979. Yeah, it's a little bit more than 20 pips, and is matching these previous lows, so that's very good. And probably on the 1 minute, the 1 minute candle opened at the 50% at the lower wick and then going bullish, so that's actually matching. As you can see here, that would be a very aggressive entry at this candle close at these previous highs, and yeah, it will go in profits very fast. 1976.7, so I would love to see 79.7, and it just stops it. I don't know if then the price will continue for possible more for more pips. Very aggressive entry in trend, but at previous PSA, not any PPL or key level. Either way, we don't know. 30 for sure. So let's see if we have the next one. So that's the next one. So we can see that it goes from 1976.7, which was it, up to 81. So it's more than 45 pips. And I think it goes for 50 pips more. Here, this is not, I don't really like it. It's just what I had the idea for this setup, because the price action is very choppy. We are still in a bullish trend, I would say, yes, but I don't like it to enter randomly here, because the price can still bounce whenever. So I'm not going to chart it up, this one. So I will delete the other one. 110, so it's afterward, so we can see that price went a huge way from this entry 1976. It went up to 1983, which is basically 70 pips. So another setup here is better. So we can see that we had this last bullish movement from 1976 up to 1983. I told you that it's 70 pips. We have a deeper retracement of around 40 pips, so which is like a 60 something, or 75% retracement. It's a very good retracement. This entry would be very aggressive because it's in the middle of the range. There's no real price action. You can't clearly see the previous highs. Yeah, you might see this line, but it can be anywhere with this line. I mean, it's too messy over here to be taken as a relevant PSA. So that's why I highlighted, okay, when the price closes back above this key level, we can take the advantage of it. So the entry would be at 1981, entry at candle close. So we need a 1984 for a TP. So for example, the price will go bullish, but will go to this is 1981. It will go, but still it's with the break-even rule will go to break-even. So that's something that I have to notice. So this is a buy around 15, 13, 12. This is break and retest, because it's a break and retest of the key level. And retest of key level with candles closing above, opposite, because the best entry would be at this bearish candle close, bullish, bullish. So if it is in trend, it's very good. we still don't have any confirmation of bearish movement because we don't have any new lower high being printed. Entry with multiple candles closing above break level. This will be a break even instead of a win. This will be 50 plus, this will be 30, this will be 45. So all these entries were very good. We go to 45 pips, and yeah, but still not able to catch them live. Here 111. Okay, so this one, as you can see, it was spotted right away, and it's basically the same. It's just a few minutes later. So this is a buy 15, 16. This is break and retest again. Oh, end of pullback now. Back to previous PSA and key level after rejection. So the price rejected again these previous highs. So it will be quite difficult to enter, but I saw it, and that's why I charted up, because we are still in a bullish section. If we then have another rejection, that would be a possible consolidation, but we are still making a new higher low, so that could possibly be still a good entry and could be considered in trend. So entry, aggressive entry at new higher low, be anticipation of new higher low. This will be a win. This will be probably 50 plus, 30, 45. So the entry will be, see, will be the same the entry. So that's why it will be the same TP. So now after we see and we have the confirmation that we are still in a bullish bias because of this breakout, that's when, okay, we're still in a bullish trend now. Yes, we are close to a 4 hour, but we just broke it. You probably could have entered over here 1983.8. This one will go to 83 point flat, so that a 15 pips stop loss would have still been safe. That's probably a very aggressive, but if it's a 4 hour PSA, maybe you enter with that. 15 pips will probably be down here, so you still be safe and it will go to profit. But this perfect setup, perfect scenario, it's exactly at this previous highs, which is 83, and it will go most likely to 86. Yes, and more. So that was a very trendy day. So as you can see, we can chart it up in the same way. The only thing is that right before New York Stock Exchange open, so it is quite rough, but it's an end of pullback to previous PSA and 4 hour PSA. After the breakout, best entry will be at the opposite candle, bullish. So that's also the same. Okay, so for now I will stop putting all this data because it gets too tedious. So I will just check the setups. So this is basically the same. Price is aggressively breaking a new high after breaking above. So that's when we have a new retest of these previous lows. So of the retest of this previous high, sorry, in anticipation of making a new low, higher low, which will make and guarantee break and read a healthy bullish trend as it was being, and that's another trade that goes very easy, very in anticipation of this previous PSA and PPL. Now again, same price action, price is still going, made a new high at 1991.25. We have a deeper pullback. This is like a 75% retracement of this move, I would say, from the last move yeah, it will most likely be 75% with a couple of candles confirmation. This one would have been also a very tempting entry, but unless there's a real catalyst, we can't really expect the price to just simply push up without grabbing more liquidity, especially after this vacuum candle that just is the double of any candle that was happening before that. But okay, as you can see, we had the retest of this strong PSA and the previous highs for more than 30 more pips. Let's move on. This is clearly another day, I would say, and we have now that's interesting to see, because okay, from London, this is doing London, very strong bearish price action. So what I would be looking for is sells, not really buys. The only thing is that this is a 15-minute PSA, which could have possibly given some bullish bias. But as I said, these are quite too aggressive of an entries. Best entry would be, as you can see over here, not having to risk too much, and entering over there would be the best setup in anticipation of the continuation bullish. Yes, we are very close to 4-hour PSA and to the 2000 level, very psychological level, but as you can see, price is giving you the chance to enter at the retest of 2000, also previous PSA. So that's when I would say your best bullish entry will be in anticipation of the continuation bullish. Now, makes sense based on the price action. It's less aggressive, more repeatable, and yeah, I would say overall it's a better trade idea than the previous one. Then this two one, when the price is so aggressively bearish, there's no real reason for taking a buy over there. As you can see here, same idea, taking entry after the price breaks above, breaks and retest these highs. That's good. And then understanding the shifting bias. Look at this strong confirmation, and the validation of the bearish lower time frame is here, because we are breaking below the last higher low and the key level 2010. That's when we can have multiple confirmation of bearish price action and a shift in bias. Higher time frame we are still bullish because we are still into a possible pullback of this overall bullish movement, but again, like probably a 75% retracement would have given you a break-even trade or whatever, but the lower time frame is strongly bearish with all this bearish move. And then as you can see, multiple retests of the PPL, failing to break above, failing to make new highs. So let me just do this. Okay, this previous PSA, which gave already multiple taps of price, and then a continuation bearish, new lower high being created at this PPL, continuation bearish, new lower high being created at this continuation. Now of course, after a strong, as you can see, strong vacuum after digging below the new 4-hour candle, it can also be that now price will grab liquidity for the continuation bullish, or at least if it's not a continuation bullish, it's an overall retracement of this bearish move, because now we can validate that the price made a new lower low, so we can expect at least a 50% or 61% retracement of the bearish move. So let's see what actually happens. Let's see what happens next. As you can see, it's a continuation bearish now. I would love to enter this one better than the other one because of the reason stated. But as you can see, price then stays below the 4-hour PSA. This one would be the best entry, I would say, but here still gives you volume, anticipation of the new lower low being created, and that's where you have your TP hit, and then possible retest again of these previous lows. The other thing is that we are very close to another, this is a 2000 key level, a very important psychological number. Let's see if it will break it below. I don't know, that was another setup on the 20th of April. On the 20th of April. Okay. What time was that? Yeah, it was later. Okay, so as you can see here, this okay, new lower low, new lower high being created, and as you can see, the 2000 actually made the price action that we were talking about before that we were possibly expecting over here. The 2000 level actually did it, because that's where we have strong accumulation of orders, and then even if it's partly just a correction on the lower time frame, it's very relevant, and you need to respect it, I would say. Now then, another possible entry, 1985. Price is still in a very strong bearish movement. We add this pullback to this previous key level and strong PSA, accumulation of orders. You also have a possible retest of these previous lows. As you can see, even if it's in the middle of the range, we can validate this continuation bearish of the trend, unless this 1985 is a strong key level. And again, the price is making a new lower low. As you can see here, we're making a new lower low, and that's a possible very high risk high reward retest entry. I don't know if the price will actually go to TP. We don't know. Let's see, 1985, right after New York Open the following day. So is around here. So as you can see, 1985 is actually quite a strong PSA, but it will go to 1982. So the entry would be 1984.3, I would say. Yeah, it will only go 20 pips before getting rejected. Yeah, that's a Friday with the news, PCE news on the, last Friday. 21st, yes, last Friday. Moving on, I don't know what happened here. Yeah, it's the same day. As you can see, price only went down here. Okay, so this is we are in a high time frame. We are in a consolidation period because price is not really making much, but intraday price made a new, as you can see here, broke above this previous PSA, so we can possibly see that this is a bullish continuation. And yeah, I don't know if it's actually, yeah, I saw it when it already happened, but that's a clean 50% correction and the PPL. Then again, after seeing the first one, that's when you could take the second one. I remember this is the day when we had some PMIs at the end of the day, later during the day, I think. 50% correction, previous PSA, and then continuation bullish, and the same happening again. Now, overall, you can see that the price is now, even if maybe now it's a very aggressive entry for a new higher low being created. Price now, after that, price is showing you a bullish trend, because now we are making higher high, higher low, higher high, and a higher low. So even if you only take this trade, would be great, because it would be a very nice win. 1990, that would be a 70 pips win. After that, we add the news, which gave a lot of bearish movement and momentum. As you can see also, that's where I take my sell. I started with the momentum, price staying below the key level with strong of bearish fundamental momentum. It will go 130 pips down. Then yeah, it's bouncing from a strong PSA and a key level. I'm not taking any buy. You can see this one would be a possible correction buy, not many more price opportunities, I would say. Maybe this one, but very aggressive. And as you can see here, the price went exactly right after in the middle of the 10 AM candle, went up to this previous PSA, tapped it on the dot with 1 or 2 trade entries. Of course, this one is the best, but as you can see, price will drop down 100 pips, so it doesn't really matter too much where your entry was. In this case, when there's such a lot of volume, you will be out over there anyway with the scalp. Then you can see that price still failed to that's when I would enter over here, for example. Okay, because we are bearish. I already took my win. We break below the key level. When we are staying below this level, so I'm not waiting for this price action, but I'm looking at here. So we have this previous PSA. This is the second to last higher low, and it's also a PPL on the dot. Probably I would have entered over there. If not over here, very aggressive, I would probably enter here. And yes, 15 pips stop loss would have been safe, because the entry will be 1952, and this one, I don't know, 1953.5. I'm not really sure. 21st. So that would be okay. So if I entered over there, yeah, that would be at 10 pips. If I enter over there, yeah, 10 pips stop loss will be good. So that would be a possible another win with the confirmation of the bearish trend. Here, price, I don't like it too much. Price is in a it's a high time frame bearish, I would say. Yes, I can agree with you, because now we are talking about London. But look, lower time frame, you are in a very strong bullish consolidation. Lack of volume, lack of direction. I don't like this entry. I will most likely to enter below these levels and the possible continuations, because I don't like it. I just don't like to take a trade over here just because it's below the key level. As you can see, price will give you multiple opportunities to enter. So it gives you opportunity of, okay, now we are already in a bearish lower time frame trend. Price is making lower highs and lower lows. That's when I would say that this entry below the key level, it's better. Maybe you enter over there and this is a rejection. You enter over there, you are safe, and you go to your TP with just a little bit of patience. When you enter over here, you don't really need to know what is going to happen next, because you are trading your setup. You're not trading the market right now. I mean, you are, but it doesn't matter. If now you enter over here, the price just goes over there, it's fine. It was fine. If it makes sense. Entering over here, for example, you enter over there and then the price keeps bouncing and then goes back up. It will not make sense, because you see, okay, I enter sells in a strong consolidation. Price did not break the last lows. Why should I take any sells? Yes, high time frame were bearish, but it doesn't make any sense. Again, another possible confirmation. Not here. This will be very aggressive, but here further failure to break above. I don't like this setup, but it can still be trade. I would much prefer these entries over there when the price is actually now breaking and retesting these previous lows. Breaking and retesting each and every of these candles. Yes, it might last a longer, because it's from pre-New York up to New York open. So I don't really like it, but that would be the best entry in continuation. Yeah, this one. This is, I think, already at the New York Open. And again, yes, as you can see, price would go from 1960 to 1980 to 1976. So a very good entry will still be 30 pips of profit. And now, of course, probably you would have a loss around here. After seeing maybe you enter over there for possible continuation buys and you get your loss. After seeing the shift in market structure, you see the shift in market structure is pretty clear at these 2 points. I don't like here because it's very close to the key level, but we are closing above this previous market structure highs, and the safest of course will be over here when a clean break and retest of in trend lower time frame, counter trend high time frame. That's a clean break and retest of this previous relevant PSA before continuation up. Again, I think yes, we will see huge momentum. So this one was the first one, this one was the second one. Then you have multiple retests of the same PSA 1996, and then just aggressive bullish. Then what we see is a slower momentum, but as you can see, it's steady. So that's when you can have the retest of the key level as a possible landmark to say, okay, I want to sell over here. And it's also very nice because it's you can see how these candles, it's weird, and that's really a vacuum of liquidity and momentum and liquidity, because okay, you are in a bearish trend. This candle is exactly closing at the PSA after breaking below, after low volume. As you can see, this is the difference. The difference is between these candle size and this one. It's just so aggressive, and of course it's validated by the next one, but it's so aggressive, and so that if you are in a bearish bias, and if you are very mindful in the chart, that's where you could have entered your sells. Price will keep giving you opportunities. As you can see, this one will be a win, this one would be a win, any entry over there would have been a win. This is after the 10 AM candle open, so this would be another stronger win. So furthermore, going fast, as you can see now, bullish price action. As you can see, it's also matching a trend line. Price is making higher highs and higher lows. Now we are later. It's already after London close, but that's a clean retest of the key level and the previous PSA. So yeah, break and retest of the PSA, break and retest of the last market structure highs, break and retest of the key level in high volume time. These are all the main characteristics that I need to look into a perfect trade and not taking any chances. So that's the main common denominator in this trade. 50 minutes an hour the PSA. Yeah, that's mostly sells, I would say. Yes, some buys, but most are sells. And yeah, that's a common denominator of this PSA, mainly focusing on the lower time frame and not really sticking too much with what the high time frame might say. Yeah, just stick to the lower time frame and take them as it is, as market is showing you. So I hope you guys enjoyed, and I see you next time.